Hey everybody, Boris from Speaking Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for September 13, 2019. The COM dollar land, as far as economic data goes this week, is essentially non-existent. But we did have a very significant recovery. I think technically you could argue that we've certainly made bottoms in Aussie dollar and Kiwi dollar, with dollar CAD really breaking fresh lows here that could suggest an extension stronger. We certainly had very, very good data out of Canada on the employment side. Canada remains, I think, the single shining beacon in the G20 universe as far as growth goes, and certainly monetary policy, which is much more neutral than everybody else, and that really puts it at a significant advantage over everybody else in the G7 pack for sure. So the levels in COM dollar land have improved, and now we're at 68, 69 in Aussie. We're now down to really testing the 131 support in dollar CAD from 133, and Kiwi also showing a bottoming out here. As a matter of fact, Kiwi may have a interesting cross COM dollar trade in our crosses that we'll take a look at. But as far as the economic data goes, there's really nothing to talk about. We don't have anything on the COM dollar land at all, except for New Zealand business manufacturing PMI, which is a tiny minor event that we are mildly bearish here, because certainly a data set out of New Zealand has been negative. But apart from that, really nothing going on here. We're very, very quiet on the economic front. So all we can do is just kind of take a look at the text and see where everything stands. I will say one thing. So I'm recording this on a Sunday morning in New York, where we've already had the Chinese data print Saturday night. The Chinese trade balance data was weaker than expected. Whether that's going to have a significantly deleterious impact on COM, especially on Aussie, in other words, if that's going to push Aussie back down to a test of 68, remains to be seen. But it probably is going to likely have a little bit of a mild negative gap opening, because certainly you see the impact of trade war in China starting to take place as we miss the upside, but not horribly. It did miss, but not by a massive amount. So I don't know how much of an impact it will have. It will most likely slow down whatever positive flow we've had. This positive flow has really been the result of essentially the warming of Chinese U.S. relations. The positive story here from political sense is that Trump is going to be desperate to make a deal. And he's definitely going to, what we say in America, put a lipstick on this pig by making whatever deal he can with China, because he understands, I think, better than anybody else, that this is the one critical factor that can drive U.S. into a recession right into the political season next year. And if he can avoid it, and that will almost certainly destroy his political chances. So his real chance of survival here is to make any kind of deal he can with the Chinese. I think the Chinese are starting to understand that too. So there's a interest in both parties in keeping the charade going of creating kind of a fake deal that certainly will not be followed, but will provide enough of a relief for the markets for the near term that we could see possibly a move here. So whatever positive headlines we get from Kudlow this week could spur a little bit more extension. Technically, we did break out the highs here of the 68, so it does puts us on a path towards the 69s on the Aussie here as the move. It's been a very, very sharp V-shaped move here, but we are coming up against the 69 resist, and I think that's going to be pretty much it for the party on the COM dollar land. The move has been even stronger, and the rebound has even been better than in the Aussie. Is really a strong V-shaped recovery here. But now we're coming up against sort of like the choppy area here post RBNZ. This is the RBNZ rate cut. So you can see the 64, 50, 65 is going to be very, very strong resistance, both on a funda basis and just on a technical basis as we get into this choppy area. But the chance for us to extend perhaps right into the zone, again, very contingent on short covering and positive U.S.-China trade flows. Remember, sort of like really at this point, the negative economic data is all essentially factored into the story, and what the market is trading the positive political expectations. So positive political headlines on the U.S.-China trade front this week are the primary driver of this trade, and that could, at the very minimum, take us to the 64, 50, 65 before we really encounter much more serious resistance on the charts here. But we are very much closer to the end than we are at the beginning of this big V-shaped move. So no surprise if we kind of ran into resistance here and started to trade back towards the 64s as the week started. And then finally, the most interesting story of the week last week on the calm dollar land was the dollar CAD story. Very sharp breaks here twice. The big reversal here, and then this was sort of the calm dollar reversal on the trade news, and then after that, the really big follow up on good employment data. So we took out the 32s, which has just been a very sticky support area since the start of August. We're now fresh lows, and those fresh lows really open up the way. There's no data here again on the Canadian front here, so it's really going to be very much driven by oil and other factors. But if you get more modestly positive flows on the trade front, there's certainly potential here for us to test the 31s. 31 is going to be the really key support. That's, I think, about as much as dollar CAD can go at this point. And then obviously the area after that is going to be the 130s. These kind of sharp moves in CAD tend to have extension. You see that they're not, a lot of times they're not even a 1-day move. They can sometimes be a 3 or 4-day move. Canadian dollar tends to have this sort of path of choppy, and then sharp moves up or down as the market reacts to a series of positive or negative events, and then another consolidative mode here. So do we have a chance here to extend to 31s? I think quite seriously we do. That's one of the stronger trades as we start the week. Wish you guys the best luck, the best trading. Boris over and out.